Hey guys, what's up? It's Simon from the Flow Trading Academy. I am back. I'm back from my holiday. Had an amazing week away with my wife and youngest, and now I am excited. I'm so excited to be back with you to do the weekly analysis. And tomorrow is my first day back, my first day trading in August, and I just cannot wait, guys. Cannot wait for the live calls with the Flow Trading Academy members, and I cannot wait to be streaming on YouTube for you guys. So make sure you tune in, make sure you like and subscribe, and make sure you join the Discord, link in the description, and let's go, guys. So obviously on gold. Now, very interestingly, guys, in the week that I've been away, gold has been incredibly bullish. It's up about 8%, probably a little bit more on gold at the moment this past week, and that is primarily due to a really poor performance for the US dollar on the inflation news and also NFP. I actually believe that with NFP they were expecting positive 70,000, actually came in negative 28,000. So gold absolutely ran away with that news. So I would really expect that to continue, to be honest. I think my outlook next week is going to be bullish. I certainly don't want to be fighting this bullish trend, but let's see where it came from. So those of you that have been watching the weekly videos that I post every single week with Wall from the Flow Trading Academy, you will notice that I always talk about this key level from October 2025, this area of strong demand where we know this is an incredibly strong area of support and demand because of this rally to the upside that occurred after huge aggressive buying entered the market at the end of October 2025. And then at the start of the year, we peaked, and then we started this huge downtrend, which we've been in for the majority of the year. Now, it looks like we have, again, gone into this key level from the October 2025, consolidated, as we did here, and now we are really in a bull run at the moment. But I'm not going to jump straight into buys just yet. Whilst buys are going to be my preference for next week, what I want to see is some sort of pullback, guys. So I'll tell you what I mean in a sec. Let's put all my drawings back on. Let's drop down to a lower time frame for you guys. And let's zoom in. And let's get the levels back up for us here. There you go. So this key level, and I'll explain why more in a minute, guys, why that level is going to be so key just here. Now, I've had this level drawn up since June. And the reason for this is that I know that just looking at the order flow data, huge sellers came into the market at this area, at this price back in June. So if I just get rid of that for you and then go all the way back to June, which is just here. Now, all these levels come from the order flow, guys. Okay, I'm not drawing this based on the candles. I'm drawing these lines based on the order flow data, and I'll show you that in just a second on the footprint chart. So in June, we had a huge rally to the upside, as you can see here, only for large sellers, large institutional sellers to enter the market, and which caused this huge move to the downside. And we've actually been bearish ever since. You see there, June, large sellers enter the market, and we've just tanked ever since. You can see that huge downtrend, and then we started to consolidate again at the October 2025 level, and then we started to consolidate for weeks and weeks and weeks, and now we're actually looking to start to move up. Now you can see what's happened on gold. If we go forward to this week, you will see we tapped into this level again after a huge run to the upside, which is exactly what we saw in June, and now we're starting to reject again. So a couple of scenarios for us to look out for, guys, and for that I need my footprint chart, which I'm going to bring up. So here's that level at the 44.30s, between 44.32 and 44.25. So if I just zoom in for you there, guys, this is what I'm talking about here. These huge participants in the market coming in on the ask. So there's a huge aggressive sellers participating in the market at this price, that the exact same move that we saw in June. Now, what we need to be careful of, guys, before running straight into the buys, we know that this level here at the 44.30s is really key. Now, it's a very key resistance, and it has been for a long time. And as is denoted by, we had this huge NFP candle here. This is NFP. This is that candle here. which caused this huge run to the upside. We've then tapped into this June 2026 level, huge sellers enter the market, and we've just started to come back down again. Now, however, what is interesting is that after the move down, we've started to create this area of support at the 43.90s, which is an area that I am very interested in looking at. Okay, guys, so this is potential area for buyers. And the reason for that is that after that big move down, we started to see trapped sellers and then aggressive buying. You can just see my delta chart just here. After this enormous negative delta entering that area of importance, that area of support where sellers were becoming trapped, we then get positive delta following it. So that means that buyers are very interested in participating at this price level. So what that means for next week, guys, is I will be looking for either a revisit to the 44.30s, and then we will start to come back down if this level holds. Now, I have no confirmation just yet this level is going to hold. I will not be just trading the price. I will be trading when I can see aggressive buying enter this area, 44.30s, and that aggressive buying to fail as it did here, here, and here. Once that fails, then I will be interested in taking shorts and targeting the 43.80s. Now, second scenario is that price does open up, it then rejects, we hold the 43.90s, and then I will be looking for any sign of absorption of aggressive selling, buyer stepping in with positive delta, and then we will start to move to the upside. So those are my potential opportunities straight away from Monday. Long term for next week, if we do continue to break down from these levels, the next possible target for buys would be around the 43.70s, which is this area here. If I just zoom in for you there. Again, you can see large participants on the ask, over 130, 170 just there, and we got this large move to the upside. Again, you can see there, really aggressive delta, followed by neutral delta, followed by large positive delta. So that means that sellers were becoming absorbed, and that's what happened. We got this huge move to the upside. There's another potential buy zone from the 43.70s. Okay, it was just here. Again, if we start to fall again, there's more potential buy opportunities from the 43.60s. 43.60s is interesting because this was once an area of resistance, an area of supply. It then turned into an area of support, just here. You can see there was once resistance, became support, and then we got the huge move to the upside from NFP. So 43.60s are great, 43.70s are great for buys. These are future prices, guys. But my initial view on Monday is going to be watching the 44.30s and watching the 43.90s. If we start bouncing around here, could be a nice rangy day, and then we'll be just looking to trade the extremes. If we were trying to break underneath this and go up, we try and break above, and we start to come down. That's the plan for next week, guys. Let's go back and equate that to trading view for you. So potential opportunities, guys, next week will be potential sells if this level can hold, which correlates quite nicely with Friday's high. So let's try and break above Friday's high, and then we could be looking for shorts back down. That's option one. Option two on Monday, guys, is going to be playing it long, which is the preferred option really, because I can see we're clearly in a very bullish market at the moment. So I don't want to be fighting the trend if I don't have to. If the opportunity isn't there, I certainly won't be looking to fight the trend. We'll be looking to buy from around this level, which would be coincide quite nicely with the NFP candle, and then look to take buys back up. Failing that, there are plenty of opportunities to buy further down, as we can see on the footprint chart. So that's the plan for next week, guys. Just to recap, 43.30, really key level. 43.90, really key level for Monday. Going into the 43.70s, 43.80s as well. They're going to be really key on the futures chart for me next week. So hope that was useful, guys. Next week in terms of news, let's check it out. Let's see what we've got next week. We've got the CPI on Wednesday at 1:30 my time. So we'll be looking very interestingly at that. And then, of course, we have US retail sales on Friday, the 14th of August. So 2 really high impact news next week, guys. See what they bring. At the moment, as I said, gold is looking very bullish. The fundamentals that Wool posted, they all look very bullish as well. So I'm really expecting moves to the upside. But for me to get involved with these buys, I need to see a pullback, or I need to see some sort of, if we're in a trending market, I still need to see a bit of a pullback to see sellers getting absorbed and then moving to the upside. So that's the plan for next week, guys. Feel free to use the numbers that you see on the right hand side of my screen. Feel free if you want to copy the markups, if you want to copy the levels, no problem at all. But if you want to trade with us live, make sure you join the Flow Trading Academy Premium. Trade with us every single day in the execution room. And you will find me live every day during New York session. I try to get on just before New York on YouTube, trade for you guys live. But if you want to be with us all day, every day, access to these charts, then you need to be in the Flow Trading Academy Premium. Okay, guys, have a great week. I will see you in the trading room. Take care, guys.
All right, let's get this underway. We had a crazy week last week for gold, super bullish. It just started ripping out all the highs before NFP even started. And now for this week, we are fundamentally very bullish on gold. And we have upcoming news on Wednesday, which is going to be US inflation, CPI. And I believe that will bring additional volume into the market, but as far as gold's concerned, we're buying the dips. So we can see here we've left a massive distribution up here at the highs. So we're going to be buying dips every chance we get. Now let's take a look at our key levels here. We got 44.32, which is going to be the high. We're going to be expecting new highs on the week. We got 43.60s, which is going to give us probably a decent buying opportunity. And around 43.30s to 43.10s for another major buying opportunity. We have some strong demand here. And right around the 42.80s to 42.70s is going to be our last line of defense for the buyers to really rip it higher. And I expect them to fully do so, maintain this very bullish momentum on gold. Now let's zoom in to our smaller time frame, our more zoomed in day trading opportunities. So right around here at the 43.89s to 43.86s, come Monday, I'm going to be looking for buying opportunities to take out the prior week's high. And if we do successfully take it out and we start transacting volume higher, I'm going to be looking for 44.30s to hold and take it all the way up to 44.60s next. And we'll see what we have above as the week progresses. Now, I'm not entirely outside of the realms of the market pulling back, but even if it does pull back deeper, I will still be looking for buying opportunities. So we're going to be looking for buying opportunities at 43.60s if we start to get a faded volume or absorption of the sellers and take it higher. Just taking it back up to this zone right here. And potentially we'll see if we can hold runners and break higher and continue. And likewise for the 43.30s. Very simple, super straightforward. Buying opportunities, more and more buying opportunities. We have a clear target to the high side and clear objective. We're buying a very fundamentally bullish gold and technically bullish gold. Now, with the Nasdaq. Now, Nasdaq, on the other hand, is only fundamentally neutral, and I expect CPI to affect it much more heavily. And we have left a bunch of volume at the high. We create a nice range up here, and we're just going to trade this range until otherwise. So if we get up into the 30,000s, I will be looking for a chance to fade it back in to the range, into the middle of the range, and my first target would be 29,530s. Now, if we go down to the lows here at the 29,330s, we'll be looking for a little buying opportunity just to fade it back into the range, again, 29,500s. So with the Nasdaq, if we're able to break above the 30,030s, which is going to be around close to around last week's highs, we can potentially see up to the 30,300s, and we'll figure out what's above there as the week progresses. But I think with Nasdaq, we do have a lot of downside potential risk, where if we break these 29,300s, we could see a minor hold at around 28,900 to 800. But I don't expect this to actually hold the market up, but I do expect a reaction. Now from there, I would actually expect the market to drop a lot further and probably retrace most of this move from last week and probably get down into these 20,400s. So let's take a look at the more nuanced view of the market for Nasdaq. Now we can see here New York session last Friday, we have faded volume at the lows, so market is bullish in this range. So we should be seeing higher prices and testing up into the 30,000s again. So if we get buying opportunities come Monday, it'll be great to buy up into 30,000s and potentially take the sells back down from 30,000s. And if we just start to fail at these highs of New York session, if we start to fail around here, I will expect lower prices and I will be fading the market all the way down to the 500s. And below that, we have a very thin volume down here. So I expect that if this level doesn't hold right away, we'll most likely flush straight through and we'll see the 300s. And around here, we can potentially find buys if volume continues to fade off like it has here. And we can find buys back up to the 500s, but I am well aware that we could see much lower prices on the Nasdaq, back down into the 29,000s and lower. So that's the game plan for Monday and next week. And come midweek with the CPI, I expect some very big moves for the Nasdaq. And we'll see you there in the premium section and see you guys on the live stream as well for New York.